think one of the things that clients have been thinking about and frankly struggling with is how to disentangle the fundamental view in terms of what the outlook is for markets and economies from the more emotional response to the U.S. election and the election result.
Obviously this has ramifications for all commodities, but in particular a key focus is on US shale oil industry. And here we believe that the shale oil recovery will be very fast, but it won't be fast enough to tip the market into surplus.
One of the top sort of points of interest from our clients is, is the dollar going to continue to rally? We believe it will. What are the reasons why? What does it mean for the Federal Reserve? That's been one of the key themes.
Once you move beyond what's happening under the new presidency and what policy will be, is on what we're going to see next from China. A lot of questions are still being asked over whether or not China's debt problem that has been building for so many years will finally blow this year. We actually think that it will not.
I think the ability for politics to affect economies and markets is something that we have to pay more attention to today than we have had in a long time. And I think for a lot of us, that's a different set of skills than we're used to using.
One of the big questions that we keep being asked on is what we think is going on in two very other big markets in Asia, India and Indonesia.
When we look at Asia demand, we're looking at speeding up of demand from India. Would that offset a slowdown in China? And here we believe that in commodities such as gold, we're actually seeing a slowdown in demand from India following the demonetization measures. So we're looking at a weak physical floor.
On both sides, India as well as Indonesia, they're relatively less exposed to what's going on in the global demand story. They're much more domestically oriented economies, but they still have the exposure if US interest rates are going up dramatically.
When I look forward, it feels like we're going to just get a rolling series of political events.
We would caution investors not to be too caught up in short-term dynamics and to keep an eye on longer-term balances. In particular, a number of commodities have imbalances longer term, and we need to see higher prices to incentivize supply.
The US is no longer the second biggest contributor to world growth. Actually, now the second biggest contributor is the Asia excluding China and Japan region. So that's ASEAN plus India combined. And that we think is the big story for the next few years. That's really been catching people's attention.
It occurs to us that the level of risk with regards to Chinese assets, i.e. fixed income, the currency, and even equities has gone higher. And I think people are quite focused on that issue.